Well, hello and welcome to Bloomberg Quint. We are in conversation with the management of Century Plyboards. The company reported a marginally lower net profit at about 34 crore rupees, a 5.5% dip over the same quarter last year. Joining us to take us through the number is the executive director of the company, Mr. Keshav Bhajanka. Sir, thank you so much, first of all, for taking the time out and speaking to us. It was a difficult quarter, albeit in line with most of the other players in the building material space. Your revenue saw only about a 7% growth on a year-on-year basis. Could you also help us understand what has been the underlying volume growth in some of the key business verticals that you're in?
You see, if we talk about the year as a whole, plywood segment has grown by about 6 to 7%. The overall plywood per se reported figures that you are seeing include a product called commercial veneer. As our operations in Laos and Myanmar have decreased, there has been a drop in commercial veneer, because of which the growth in plywood is not visible per se. The MDF segment has had a good growth for the year as a whole and even for the quarter. MDF we expect to continue at 80% plus capacity utilization. So I think for the next year as well, we are going to see a very healthy growth in the MDF segment. In laminates, there has been volume growth, but the problem has been an increase in raw material costs, because of which gross profit has been lower. Now we have been able to pass on these cost increases to the market. So there should be growth in the laminate segment, and there should be higher margins in laminates as well.
Right. Sir, I remember speaking with you about a couple of months back, and you had mentioned that the plywood industry is going through a down cycle at the moment. And we are seeing that, reciprocate in the numbers as well, which has been more or less flat on a year-on-year basis, only about a marginal improvement there too. How are you reading into things over there? Do you expect this persistent slowdown to continue? If so, then how many more quarters of pain do you see ahead of you?
You see, this has been a difficult time period, particularly following the implementation of GST. I think GST has created a dent in the unorganized sector, but it has been far smaller than what we had expected. The industry is still getting used to the change, and I think the slowing down of the economy was something that was, particularly in the real estate segment, was witnessed over the course of the past year and a half. Now, with a strong government, with a very strong mandate, I think there's going to be a focus on the housing sector, which should result in easing on the pressure that has been there on us. This, alongside the implementation of GST, which is now settling down, we should see a benefit within this year itself. Maybe the next few quarters would be looking better, and definitely by the end of the year, we should see a recovery in the economy.
Okay. So you mentioned about how the higher raw material prices, they have impacted your margins, which have come in at about 10.8% versus 15.3%. How much, just wanted to understand that how much of the margins would get impacted because of the oversupply situation that is there in the MDF business, more specifically, because a couple of months back, there were several brokerage reports indicating a supply glut in the domestic market. And how do you see the product mix going forward from here on, and what would be the share of MDF and other products to your overall revenue?
You see, MDF, like I said earlier, also is going to be a growth product for us. Despite the realization of MDF falling by close to 10%, which is substantial, our EBITDA margins have not fallen to the same tune. I think our EBITDA margins would be 4 to 5% lower. The reason behind this is higher capacity utilization on our side. We have been able to increase our market share, and this has helped us in increasing our margins, or rather in reducing the deficit in margins. I think the margins for the current financial year would be 13% plus, and going forward, we're looking at a stability at this level for the next year as well. In MDF, I definitely believe we will have double-digit plus growth for the following year.
Okay, so clearly a couple of quarters from here on is where you see the recovery in the plywood business, and right now the MDF segment would be the key growth driver where you expect a double-digit growth. But moving forward, sir, I would also like to understand about the margins. They have come in significantly lower, and this might just be a one-off because of the higher raw material prices, but we have seen over the last several quarters that this has been considerably lower than what your average margins are, which is slightly in the mid double-digit segment. Do you expect margins to recover, and would that be driven by the price hikes that you were mentioning? And if you could give us a sense of what these price hikes would be in terms of the quantum.
You see, I think you're talking about the last quarter. Our marketing expenses, particularly in the plywood segment, are not accounted equally throughout the year. So I think in the last quarter, we had a substantial portion of the marketing expenses that were booked. So I think the lower margin that you experienced in the last quarter is actually not a correct figure. Last year, our margins in the plywood segment were stable at around 14 odd percent,
Right.
and they were close to what they were the previous year. I think that is likely to continue. For MDF, like I've already told you, the margins should look stable at about 13% plus for the current financial year, the year that is coming ahead. In laminates, the margins have been substantially lower because of raw material cost increase, but we have been able to pass this on to the market. So this year we should be looking at higher laminate margins as compared to last year as well. So I think on the margin front, margins will not change substantially, but they should definitely look to be higher than last year.
Okay, sure. And the quantum of price hikes that you have taken, do you feel that they are enough to safeguard those margins that you're talking about, or do you think that there would be a need for further price hikes going forward?
I think we need to look at it segment wise. In laminates, we have taken price hikes to safeguard ourselves against the increase in raw material cost. In plywood, the majority of the problem has been a lack of growth. As such, we have taken nominal increases in price, but we are looking to maintain margins. In MDF, prices have eroded by close to 10%. And as you mentioned, because of an oversupply position in the industry, there is no price rise that we are foreseeing. But with higher capacity utilization, margins should definitely stabilize or improve.
Okay. So with lower marketing expenses and stable margins from the other businesses and higher capacity utilization from the MDF business should help you maintain those margins of about 14 to 15%.
There will be no lower marketing expenses. It is just that marketing expenses are stable.
Okay.
In the last year, the bookings were more towards the end of the year because there are certain new initiatives that we have implemented now for which the expenses started happening as early as December last year. So the marketing expenses would be relatively stable, but yes, we would be looking at a higher margin for this year. We are targeting a higher margin for this year as compared to last year.
Okay. So lastly, you are also expanding your capacity in terms of the particle board and MDF business. You're setting up a new unit in Uttar Pradesh. Can you share some more information with respect to your expansion plans in FY20 and an update with respect to when do these facilities come on stream?
Particle board has actually been a very good segment for us for the past couple of years. The EBITDA margins have been consistently in excess of 20%. We have a small capacity of close to 200 cubic meters per day that we have established in Chennai. Uttar Pradesh has a far lower raw material cost than Chennai. Alongside that, it is far more hedged against imports as compared to Chennai because the transportation cost in particle board would be to the tune of 15% between the south and the north. As such, we are looking at setting up a 500 cubic meter capacity in particle board in Uttar Pradesh, and I think this capacity would take us about a year to establish, but it is still in the finalization stages, and we are doing our due diligence, post which we shall take a decision. In MDF as well, because we are already at 80% plus capacity utilization, we are looking at a capacity expansion in our existing unit where the capex would be substantially lower. So we are looking at a capacity expansion by about 75%, the cost of which will be close to 40% of the existing cost of setting up the unit. So this again is in the finalization stages, and post due diligence we'll get back to you.
Okay, sir. And before we let you go, any guidance that you could give us in terms of how do you see the revenue growth or the bottom line growth panning out in FY20?
We will be looking to maintain EBITDA figures for FY20, and we definitely be looking at double-digit plus growth in FY20.
Okay, sir. So thank you so much once again for taking the time out and speaking to us.
Thank you.
That was the management of CenturyPly Boards.